We're good. DJ, we're ready, sir. Thank you so much. Hello, and welcome to the first episode of Taxes for Creators podcast. I'm your host, Jasmine, widely known as the Creators Tax Strategist. I'm so excited to be hosting and launching this podcast with you guys here today. We're streaming live, recording live from CPA Con, an event, yes, CPA Con, CPA Con is an event that is revolutionizing and redefining the accounting profession as we traditionally know it. This is the perfect place for us to start this conversation because just as CPA Con is breaking all the boundaries of what we know about the traditional accounting profession, we're here to help creators change their mindset and their thinking about taxes, wealth, and their legacy. Today's guest is an incredibly special person to me, not just because of his influence and success, but because I've had the pleasure of being friends with him for 20 plus years in counting.
Crazy, yeah.
Since children, young children. Today, we're gonna dive deep into conversations about taxes and accounting for creators. And I am excited to be having this conversation with Berlin because we've had the opportunity to work together since before his taxes and accounting required the depth of involvement that they do now. So, with that being said, as CFO and Director of Operations at Berleezy, Inc., I am honored to be able to oversee the foundation and the growth of Berleezy's ventures to ensure that every step we take is guided strategically considering financial and operational tactics to make sure that we really extract the best of his visions for what he wants to create in his future. And I'm honored to be able to be a part of that with you.
Thank you, Jazz. I appreciate it so much. Let's get a round of applause for that. Oh my God, I think so, right?
I got it out. Let's go to the phone. Thank you for being here.
No, 100%. Thank you for having me.
Of course.
This is awesome.
Absolutely. So I have a couple of things prepared. I have some notes prepared that will help guide us our conversation so that we can make sure that everybody is able to walk away with exactly what they're looking for. So with that being said, before we get into the good stuff, Berlin,
Okay.
I gotta pull out some receipts.
Jesus. Okay. All right.
So, like,
what does that mean?
You know, something funny, something creative. If you could have the production team help share a short little snippet video. You got your new receipts.
Oh God. I don't know where she unearthed this from.
That's Berlin.
So for context, I think this was freshman year of high school. So for context, we're all mimicking her right here. She was always the life of everything. You gotta send me this.
Here it is.
This is a muse now that I'm thinking back on this.
Were you making fun of the way I pull up my pants? Were you making making fun of the way I put on my glasses.
That's how. How did you even find that? No, you don't have to clap for that. You don't have to clap for that. I don't know where you found that. I don't know how you have that stream. I'll show you again one day, I guess. But that shows we've been friends for a very long freaking time.
And you've been a comedian since day one, roasting me for absolutely no reason.
And you were filming it. You've been loving it, you know?
I've been filming since day one.
That is awesome. Wow, I don't know where you found that, but yeah.
It was shared on my Facebook from October 4th of 2011.
Anyway, thank you again for having me.
I went digging for it. But, so thank you, all of you, for being here. Thank you to Kendale for allowing us to host the first episode of Taxes for Creators podcast live at CPACon. And with that, I'm going to go ahead and jump into some questions that I have for Berlin, and we can get to know about your journey in turning your creativity into a thriving business. So, I wanted to know, well, you know what? We've gamified taxes and accounting, so why don't we start with a little quick game?
Sure.
Let's do a quick game of this or that.
I don't know what to expect anymore, so sure. Let's game.
Okay. Let's do a quick game of this or that. I get 3, you get 3.
Okay, dude.
All right. Mario or Sonic?
Mario.
Okay.
Go Mario.
Mario. Favorite console as a kid?
Favorite game console as a kid? Okay, I'm gonna have to go with the first gaming console I ever played. It's the Game Boy.
No.
It's the Nintendo Game Boy, the original one, no colors, no lights, just Kirby and Mario. That's actually what, yeah, Mario for sure, and the Game Boy.
Okay. Last one. Who was more likely to get in trouble in school? You or I?
Oh, that's easily you. That's easily you. Because the video shows the proof. Again, we were all mimicking her. That's what the camera don't show. The camera don't show all that, right? Because she's behind the camera, but.
I was sure you were going to say you.
No, I was a great student.
Okay.
I was a great student.
Okay. All right, fine, I'll take it.
Just wait till I go through my Rolodex. I got clips for you too, I'm sure. I'll find them.
Receipts, we're going to be sharing receipts.
Yeah.
Your turn.
Okay, just asking you 3 questions, right?
3 questions, this or that.
Okay, which Pokemon type would you choose? Fire, electric, or water?
I'm glad you didn't ask me about the Pokemon itself.
I knew you didn't have that.
Okay, thank you, I appreciate that. Fire?
Water, or electricity?
Whoa, I'll go with fire.
Okay, is there a reason why?
I'm always on fire.
Okay,
You know what I mean?
I heard that, okay.
Be fire, be what it is that I am.
Next question. I'll go with an original, not an original, but a common one. If you're stuck on an island by yourself, what 2 things would you need to be happy, excluding people?
Okay, oh, you know me.
Yeah, I already knew. I knew he was going with that.
All right. Shoot, water? Yeah?
You're on an island, sis. You know you got plenty of that.
Okay, fine. Oh, this is difficult. Can I have my phone?
Sure, that's one.
My phone with the charging cable.
Right,
is that a second item? If it's 2 in 1, I'll choose another one. If the charger comes with the phone.
One more.
Okay, one more. Is there food on the island?
No.
No food. I'll take
We'll
food.
take that. Okay. And if you were, what would you say your spirit animal is?
Oh my God.
You didn't prep me for nothing. I'm ready though. What's your spirit animal, sis? Come on.
Spirit animal? I don't know. Can you help me? Do you know what my spirit
I would
animal is?
say, okay, I would say heart of a lion, but if I say spirit animal, what's the name of that animal? It's like a honey badger or something like that. It doesn't back down from nothing. You know what I'm saying? It's like, yeah, that's what I was saying.
Oh, what is it called?
I don't know.
Oh,
Yeah, but I
okay.
think it's a honey badger though. I think it's a honey badger,
Okay.
hopefully.
The Creator's Tax Strategist, aka the Honey Badger.
We don't have to coin that.
Okay, we're not calling that. All right, we don't even know if it is a honey badger. It might just not be a honey badger at all.
No, I don't want to say anything else wrong.
Okay,
We will go
yeah,
ahead
we're
and
gonna leave it.
back.
That was 3.
Yeah, that was 3.
Anyway. Yeah, that was 3. Yeah, that was it. Honey badger it is. All right, so with that, our game is over. Let's get to some taxes, okay? Taxes and accounting, the good stuff we're gonna get into. So, I think what everybody wants to know, especially the feedback we've gotten from some audience members and your fans from posting and sharing this. You built an incredible brand from scratch. Yes, sir. And everybody wants to know what inspired you to get into content creation in the first place. And with that, when you were getting into it, you know, what was the turning point where you thought this could be a full-time career for me?
Okay. Okay, so I have been watching YouTube, I want to say since middle school, and that would be like 2004, 2005 maybe. And I was watching YouTubers like Kevin Edwards Jr., Timothy De La Ghetto, Deshaun Raw. Like these are names that were in a much earlier circuit of YouTube than it is now, but this type of stuff I was watching when I was coming up. And I always was fascinated by the fact that like people were just being themselves, got their own cameras, their own friends recording, and building a real community behind it. And so I started making videos in middle school, right? Like around that same time, which is crazy. And it would be like lip sync videos for Michael Jackson songs, super cringy stuff that you can't find anywhere on the internet ever. And I deleted that channel maybe going into my senior year of high school. And I picked it up again around 2016, 2017. Wait a minute, I got my years. No, I got it right? I did say 2000.
Viral
Yeah.
Thanksgiving of 2017.
Okay. That's why she brought it to me, y'all. So around like 2016, I was doing skits. I was doing, talk, regular YouTube type of videos. But one day I was sitting, waiting to go to church with my family, waiting on my family to get ready for church. And I was watching this cartoon called Hey Arnold. And it was on Nickelodeon. And in the theme song, I was just noticing a lot of things going wrong in the theme song. So I just made a video talking about that, threw it on Twitter, thought nothing of it. And I did a couple more videos after that, but I knew there was something special about that video. So I paid certain profiles on Twitter, because at the time, like people would have like, pay $5, $20, $50 for promo and I'll retweet it. So I sent it to like 3 pages, and I'm like, please, bro, I think I got something here, can you just share it? And went to bed that night, woke up to maybe like 4,000 retweets on my original tweet about it. And at the time, I'm like, bro, I'm viral. I made it, this is it. And from that, I did another cartoon where I was just exposing what was going on in the show. And it was always in a comedic taste. I did that for maybe like 3-4 times, and it was the same formula, right? Like I would make the video on YouTube, I would cut it down into like 30 to a minute short form, before short form was a thing, and put it on Twitter, pay somebody to retweet it, and eventually on Twitter I became like the cartoon guy, right? And I knew that wasn't sustainable, but I also knew how viral it was growing, and I would attach my YouTube link to each tweet so that people would funnel the traffic back to my page. So as everything's growing at the same time, I'm realizing like this is great, I'm getting subs, I'm getting views, but like money really wasn't coming in like that yet. And it wasn't until I did like maybe the 8th, 9th, or even the 10th one that I started seeing more ad revenue coming in. And I got my first check maybe like winter of 2017. And at that moment, I knew like, okay, this is something bigger than me now, right? It's not just cartoons, like, and I'm always thinking like, how can I just, support my family, because that's really what's most important at the end of the day. So I knew like I could keep doing these cartoon things and do all that, but like that's not really there's no longevity in that, because there's only so many shows, there's so many jokes I can say that's going to be repetitive. And so I switched to gaming, started doing video game content where I always tell people it's like having an uncle and y'all at Thanksgiving and y'all watching a movie, he just won't stop talking. That's what I do over video games though. And I made that transition like 2018, and then COVID hits 2020, and everybody's inside. A lot more people are online, and that's when I saw the gaming channel take like a new height completely. And at that point, Jasmine mentioned like she has been a part of everything from the jump, from me making videos to making my first check to now what we've been growing and doing now. But like, it was at that moment when I realized like, okay, there's levels to this that I needed more help with. Because, you know, most people, when they create content on these platforms like YouTube, Twitch, whatever the case, like they're going in the same way I did their personal banking code, right? Like they're putting in like their real social security number. And there's things that I had to learn, some the hard way, some, thank God that she was here, to know that like, okay, there are strategies to put in place, not only build wealth, but retain wealth, which is very hard when you're doing entrepreneurship jobs like content creation. Like anything can be a business expense. You're never not thinking about content, and yeah. So
I love that. I love that you said it's also about retaining.
for sure,
It's one thing to create it and work really hard to get together on it, but if it's gonna go as quick as, you know, or even quicker than it came,
exactly.
then yeah. So I just want to take this as an opportunity for those who are listening in and watching that might not know. Berlin, as many of you know him to be Berleezy, truly has a one-of-a-kind, iconic brand in the gaming community.
Thank you, bro. I appreciate you saying
Absolutely. And I believe that his success is a testament to his creativity, tenacity, and in my humble opinion, most importantly, to your authenticity and your unwaverable just dedication to not only your craft, but to your community.
Wow, thank you.
Absolutely, and I think everybody in your community recognizes that about you.
Well, I appreciate you saying that. You know, you have been an integral part of it from the jump, you know, and it's nice to have somebody that was a real friend to me growing up, that I can always be like, am I doing too much? Am I tripping? Have I lost my way? Et cetera, et cetera. And you have been so solid and so grounded, and any question that I have, any crash out that I want to do over whatever, like if it's the content or the money or whatever, you always have like a very, I want to say like God-given peace that you bring to your clients, bro. Like you really are like, I don't know, man, you either are the greatest actress of all time or you truly are like meant to do what you're doing. You know, it's a very vulnerable position. And yeah, to be talking about money, you know what I'm saying? And to trust somebody enough to know that you're in good hands. You know?
Sure, absolutely. And that actually takes us to a good point. Is it, you know, I think money is a concept that like everybody's almost weird about.
For sure.
You know, you're weird about it if you have it because you're like maybe feeling some type of way about the fact that you have it. You feel weird about it if you don't have it.
Yeah.
And, you know, that because the conversation and topic of money is just, you know, obsolete in our schooling and families, and it's not something you talk about with friends, and it's just a taboo of a subject, really. How have you kind of transformed, or really had to transform your thinking around money and being able to like be a little bit more receptive, maybe to talk about it or to ask about it? Or...
I would say it's easier to want to retain money and be very cautious about it if you didn't come from it. So I'll say that, right? Like my family come from humble beginnings, and I always treated like my success as like everybody else's around me's success. So I never wanted to do things or put myself in a position to where like I'm taking as big of a risk that I could potentially squander everything, right? And part of that is asking the right questions, right? Like, when should a creator become a small business? When does the transition from this is a hobby of mine to this is now something that's generating wealth like a business can, like, and if that is the case, if that is the time, like, what the heck is an LLC versus, you know, and I don't even want to start making examples because I'm gonna get them wrong. This is why I have her in my life, but it's like, you know, an S corp versus a ABCDEF, you know, it's just, there's so many questions that one can ask, and, you know, yeah, I would say like, the earlier the better. The earlier that I was able to take myself seriously as like, okay, yeah, for sure, this is a hobby of mine, I'm having fun, but like, I know that this can grow into something. And I think even at the time, the landscape is way different than it is now. Like now you can look at content creation. I can speak on gaming and streaming specifically. It's like anything is possible. Like these brands is working with streamers, and they're coming to streamers. It's not like the streamer has to go. It's not like Like somebody like Tyson that like should at this point be a household name after what that man has been doing. And it's like, I'm pretty sure McDonald's came to him. I'm pretty sure all these brands and all these people are coming to him. And that's the power of this. So yeah, I would say at this point, everybody should be treated like anything is possible, you know.
So it sounds like what I understood from what you said is that you really had to make a mindset shift.
For sure.
From treating this as something that you're having fun doing and as a hobby to like, you know, I can have fun while I'm doing this, but it's not necessarily a hobby. I actually have to start thinking about this a different way.
100%. 100%.
I think that's a great area because I know the guests and audience watching are really wanting to learn some tactics and information about tax preparation, tax advisory, what to do, what not to do. Just because we are talking about hobby versus business, I just want to take a quick moment here to sort of divert from where we were going to mention that it's important. And I know that it is absolutely top 3 questions that creators have. What is the difference between when you are engaging in something as a hobby, and I'm not referring to it by our definition of a hobby, but rather the IRS's definition of a hobby versus something that you're doing actually for business. So here's the deal. A lot of times when you're starting a business, you are not making money, but you're spending money, right? So you have deductions that are, how do I say this, like legitimate, but you don't have any earned revenues. So now there are limitations on the deductions that you can take before there was any revenue generated because business didn't exist if dollars weren't generated, right? So one of the most important things as it relates to specifically hobby rules with the IRS is that you can't take deductions for something that could otherwise be considered a hobby. So like a myth here, to debunk real quick, a lot of high earner W-2 employees that are just kind of locked in their tax return and don't have any way of deducting expenses because they're not a business owner, they're just W-2 employees. They just create a Schedule C, which is the form you file when you're a self-employed person, not an LLC, not as a corporation or anything like that, but when you're just, filing as a sole proprietor or single member LLC, you file a Schedule C within your personal tax return. So what ends up happening is if you create a little bit of a loss on that Schedule C in your tax return, now that loss that you created is gonna offset the W-2 income that you had. So if you made $100K at your day job on your W-2 and you had a $5,000 loss in that business that you did, now your $100,000 W-2 would actually be taxed as a $95,000 W-2, right? Because you get that $5,000 losses. But it's a very strict area where the IRS wants to make sure that you're not engaging in a hobby and creating a loss of a paper trail for it, right? So I'll give you an example. Think of someone who's a ski enthusiast.
Okay.
They love to go skiing and it's not cheap. So, they're having to buy the tickets, they're having to buy the gear, they're having to do this. Well, it wouldn't be nothing for them to go put a Schedule C on their tax return and put all the expenses that they incur when they go skiing and say, oh, I was doing that because I was trying to become a ski instructor and I was learning to do this. So it technically is a business.
And I had to go to Aspen. It's the best mountains. It's the best mountains.
I wouldn't have known how to do it otherwise or teach people otherwise if I wasn't in Aspen.
Exactly.
And I had to get the bougiest hotel. I had to. So it's a business expense, right? You know what I mean? Just in case. So all jokes aside though, that is the difference between hobby losses versus legitimately, creating expenditures in the pursuit of income. Right? So if you had to tell me, well, like, hey, Jazz, in what instance would that whole ski situation, like, what if the person is legitimately, I'm sorry, the opposite of that. In what instance could it be good?
Okay.
Or like, in what instance could that person substantiate that?
I see what you're saying.
I'm not doing this as a hobby. I'm going to be able to substantiate this that I'm genuinely doing this in pursuit of income.
Okay.
There would be other factors that, personally myself as an advisor would feel better that client having in their disposition as opposed to not if it was going to be up to me to substantiate that expense. For example, like, do we have a website where you're offering your ski instructor services? Do we have, have you taken courses? Are you doing any kind of continued education, or anything that would amount or signal that you're actually doing this in pursuit of business, as opposed to something that you're just doing because you like to do it, and because it has an expense, it's gonna be a loss on paper.
Right.
So that's the difference between hobby activities versus genuinely engaging in business that is to the pursuit of income. And one versus another is what allows you to take write-offs versus not against that. And I just feel like, last night you were like, give me a short answer. I was like, I can't, it depends. Like,
Yeah.
I feel like that answer kind of amounts to any question somebody might ask about taxes. It's like, all the answer is always, I don't know, it depends, and so I just want to finish that thought of the hobby versus self-employment income idea, to mention that there, when you do incur expenses truly in the pursuit of income, but you haven't generated revenues yet, what happens is you have to kind of hold on to those expenses, and up to like $5,000 in 2 different areas. You can deduct them in the first year, but then otherwise, like if you went and spent $20,000 trying to start a business, but it hasn't created money yet, you would need to amortize, meaning slowly take those deductions. And by slowly, I just mean like broken down into the time span of 180 months. 15 years, you would have to take that 10K in expenses that you incurred but couldn't deduct because there was no income for it. You would have to amortize those expenses over the next 180 months, so that you don't lose out on taking them, but you can't take them all in 1 year because you weren't actually engaging in business in the year that you incurred those expenses.
Interesting.
What do you think about that?
Okay, so I'm gonna say, like, for dummies, right? I'm gonna dumb it down.
Let's do it.
You're saying the difference between a hobby versus a legitimized expense is how serious you look to the IRS, right? Like, if I'm a ski enthusiast, I want to have my website, I want to have my courses available, and then part of my expenses, if I am going on that trip, would be seen as legitimate versus I'm just going to go have some fun.
Who's your tax advisor?
Okay, so
wow.
It's her. So okay, so low-key, I did have some questions for you.
Let's do it.
I did have some questions for you.
Okay.
Okay. When should a content creator set up an LLC?
Okay. I can give you, because I know you want short answers, and I don't really
It
ever
depends,
have
it depends.
right? 2 things I'll say. The first clarification I want to make about this that's super important to your question is that an LLC does not save you money on taxes. Having an LLC is a safety vehicle. It's not a tax savings vehicle. Meaning, you go get an LLC because you want to make sure that what you're doing as an individual is kept separate from what you do in those activities in that LLC.
Okay.
Right? So, one of the biggest myths is like, oh, I want to be able to deduct more expenses, so I'm going to go get an LLC because that means I'm going to be able to write off XYZ. You can write off the same XYZ whether you're an LLC or you're not an LLC, so long as it's a legitimate business expense.
Now, when we're talking about expenses like in taxes, like trying to save money on taxes. So let's say a small creator is trying to figure out when they start paying taxes. Is there like a threshold of income they have to make?
Great question.
Okay, cool.
Wonderful question. If you are earning W-2 income that's already been taxed, like, they traditionally, they take out federal taxes, Social Security taxes, Medicare taxes, so on and so forth.
Okay.
If we're talking about traditional W-2 income that's been taxed, then you have to file taxes when your income exceeds the standard deduction for the year set by the IRS. So you're single for the year 2024, your standard deduction is going to be $14,640, and that fluctuates with inflation and stuff every year. Okay. So in 2024, you're single, your standard deduction is $14,640, and so if your W-2 income exceeds that, you have a filing requirement, And I just want to clarify, the reason why you would have a filing requirement above that number is because that's a standard deduction the IRS is going to give you to deduct away from your income anyway. So it's like if you made $14,000 and you have a standard deduction of $14,640, you don't have a filing requirement because you made less than the threshold that you would have gotten as a deduction anyway. In that, I say though, but 9 out of 10 times, somebody who has a W-2 and doesn't have a filing requirement should still file because taxes were withheld, federal taxes were withheld out of their W-2, that if they filed, they would get back because they don't have a filing requirement in the first place.
And is that the same, this might not be an easy question to answer right now, but like, is that the same for a company like YouTube or Twitch or all these things?
No.
Okay.
And the reason for that is because when Twitch or YouTube or anybody, your brand deal sponsorship,
right.
when they pay you, as you know, they're not taking out taxes out of your check.
Right.
So we are now having to make sure we consider and calculate federal income tax, if you're in a state that has state income tax and state income tax. But then besides those two things, the one thing that specifically pertains to self-employment income that you're asking me about
right.
is Social Security and Medicare taxes, which is otherwise the payroll taxes that would have been withheld if you were on somebody's payroll. So because when YouTube pays you, they're not taking out Social Security and Medicare taxes,
yeah.
you have to file the first dollar that you have self-employment income, because even if your standard deduction wiped out your federal income tax liability, you still never paid Social Security and Medicare taxes on that money.
Interesting. So, okay, because I'm learning a lot, but I'm also asking questions that I think people would want to know.
Of course.
So let's say somebody starts making money for the first time, for the first year, right? And they're doing content creation. Let's say they're on YouTube or they're TikTok, Instagram, whatever the case is, right? And they're earning money, and it's not being deducted by their company, right? They're just getting paid directly.
Yes.
What would you say, like a step-by-step thing they should be like? Is it like, okay, you need to save X percentage, you need to open, like what advice would you give them?
You almost said it in a different order. You're listening a little too much these days.
Okay, I know a little something.
You know a lot. First things first, separate your bank accounts. You already know that you're going to earn self-employment money. Make sure that self-employment money is deposited into a separate bank account that we can make certain that any self-employment money that you make is going to go into that bank account.
Okay.
Second to that, you want to spend everything that you're going to spend for business out of that same bank account.
Okay.
So you made $100 on TikTok, you're going to spend $50 getting a new tripod. That should happen in and out of the same bank account, so that when you're going to now, as like step 3, need your income and expenses to file taxes, it's all in one bank account. You just go, have one set of bank statements, you know what was deposited was income, and you know what was spent was expenses.
Okay.
So now the work is a lot less than having to go find how much you made from where and what you spent where. And it's important, especially because, you started this by saying it's a small time creator.
Right.
A lot of times, certain, I want to say merchants, but in this case, let's say TikTok or YouTube, so on, they don't issue 1099s, or if they issue a 1099, you don't get it because they sent it to a different address, or they did this, or they did that. You know the nightmares that,
100%.
come up in the creator industry with income and finance because of that situation with bank accounts and 1099s and the back end of things not being clean. So if you proactively make sure you're keeping your own record of what you're making and what you're spending, we're not worried about filing a tax return that doesn't include that $2,000 you made from that place because we forgot to include it since they didn't send a 1099. I'm not relying on them to send me a 1099 because I already know everything you made went into that bank account.
Yeah.
And I'm able, I want to go somewhere like way deeper with this, and I will, because it's important for creators to understand this. When you do that and you're able to make sure that all of your income from different revenue streams went into one single bank account, you're able to do something that, I don't want to say I'm the only one that does this as a,
Is the Jasmine method.
Okay. I've heard now one other person who's a tax attorney mention this, and it just made me feel so good because I was like, oh wow, she's good, right? So there is something that a lot of people don't know about, which is being able to pull transcripts from the IRS, okay? There are several different kinds of transcripts that you can pull from the IRS. You can pull copies of your prior year tax returns as transcripts. You can pull transcripts that show all of the income statements that anybody has issued to you.
Oh, wow.
So one of the reasons why you've never gotten an IRS letter saying, hey, we didn't include this on the tax return, even though there have been plenty of times where we didn't get 1099s from people we needed to get 1099s from, is because one of the things I especially do for creators is before I file the tax returns, I always pull IRS transcripts for their EIN numbers and for their social security numbers, because as you mentioned at the beginning of this, unfortunately, sometimes people fill out that information with their social
info.
Yes, sir. So when I pull transcripts, I'm able to know what the IRS has on you before I give them what I know we have on you. They never have more information than I do.
Okay, I don't know what I'm talking to you for. Oh my God.
Really? Because when I pull those transcripts, I can't tell you how many countless times there has been an incident where like $200,000 was deposited into this bank account and I would account for it under this business typically. But when I ran transcripts, I actually realized that that $200,000 was reported under a completely different EIN number. So if we had submitted that,
they would have been wondering where that money was.
they would have sent you a letter saying, hey, you didn't report the $200,000, and it would have required us to go back and be like, no, we did. But see, what had happened was the W-2 was still, or the W-9 was filled out under that, but we reported it under this, and then we have to file an amendment to take it off of this and put it on that. Proactively running transcripts and me knowing what they know before I let them know what I know, I already know what they have reported to what social security number and to what EIN number. So in the God forbid event that I do get a 1099 that's under someone's social instead of their EIN, I enter it on that personal tax return where it's supposed to be. So it hits the computer system of the IRS that it was reported, but then I expense it right back off of that tax return with the line item description of the tax return EIN number I did put it on. So now it's not going to get stuck in a computer-triggered audit because the computer is recognizing that you didn't report this amount of income because you didn't report it, you just expensed it right back out and then reported it somewhere else.
Dang, okay.
What are you thinking? Good stuff?
Yeah, that's like a CPA game, you know what I'm saying? That's on fire to me.
It's good stuff, yeah.
Yeah.
And it's really helpful because, like I said, those things that we just talked about, filling out the wrong W-9s, having money deposited into the wrong account, not getting your 1099s, it is so prevalent in the creator economy that if you don't do it the way that I'm doing it, you are for sure bound to have IRS letters that you then have to deal with. And, it wouldn't be the worst case scenario to have to fix that. The solution would be to show, and unfortunately I've had to do it before, to show that, hey, like this is the same income that went here, but it creates a problem because money is a fungible asset, meaning this $1 is the exact same as this $1, and there would be no way to tell it apart from each other because it's a fungible asset, right? So when the IRS is like, hey, prove to me that this is the same money that you reported over here, that you reported over there, the only way you can do it is by, I mean, honestly, I wasn't even successful in doing it the first time because they ended up coming back and being like, well, how do I know that that money is the same money that you're reporting over there? And it just became so convoluted that we had to completely scratch that strategy and prove and substantiate that money in a different way to the IRS. But that was an issue because money is a fungible asset. I'll never be able to come and say, like, no, this dollar is that same dollar that I put on that tax return. It's not that dollar that I put on that tax return. There's no way to differentiate it. So really just doing things correctly from the get-go is kind of the only way to just stay clear of headaches and problems from the IRS.
Yeah. Stay proactive.
Stay proactive because they're the, excuse my language, but one of like the worst, crappiest agencies to deal with. We don't have enough agents. The agents that we have are, really like glorified customer service agents. They don't know tax law. So even in IRS cases where I'm representing an audit, like you would think like, oh my God, I gotta be scared of the IRS agent.
Yeah.
Like, oh my God, no. I'm like, hey, did you know that section 162A says that you can do this thing that you're telling me that I can't do? And then a lot of times it requires them to escalate it to a different department that is trained and knowledgeable on tax law as opposed to customer service.
And they answer the phone, they're like, hey, Jasmine.
It's you again.
It's you.
Here we go, what do you have? But yeah, so being proactive, as you said, is always the best game no matter what area of taxes and accounting we're talking about.
Perfect.
Being proactive. You have some other questions for me? We went to
We
LLCs.
got time for some?
We do.
Okay, good. All right, let me see. So,
You asked me when you should set up your LLC. I said that an LLC is not a tax savings vehicle. It is a protection vehicle. The second part of that is you would have your LLC you should have your LLC when you realize that you're doing what you're doing intentionally in the pursuit of business. I was clarifying that it's not a tax savings vehicle because I don't want you to think about going and getting an LLC when you're thinking about saving taxes, but rather when you're thinking about legitimizing your business, being professional, having an actual LLC bank account, so having liability protection, so on and so forth. And then where you said like, okay, so then what the heck about an S corporation, and then what? An S corporation is not a type of a company. It is a taxing election.
okay.
So you would go get an LLC and then request the IRS to tax it as an S corporation to get the benefits of an S corporation. But you can't go to the Secretary of State and open an S corporation because it's not something to open. It's something to have the IRS apply to your LLC when you're making enough money to benefit by being an S corporation. Ask me when you benefit by being an S corporation.
When do you benefit from being in an S corporation?
All right, I like that question. $50,000 is the magic number that I like to say in profit.
50,000 in profit.
50,000 in profit. At the point which you are generating $50,000 or more in profit is about the area where it makes sense for you to spend the money required to maintain an S corporation. Because when you become an S corporation, now we're talking about payroll, we're talking about corporation taxes, we're talking about all these other things that you have to keep up with, which is going to cost money. So you don't want to go get an S corporation to save $2,000, but you're spending $5,000 a year to maintain it because of its filing fees and that kind of stuff. So 50K is the minimum, I would say, where you definitely got to make sure that you're in line with getting your, formation and your strategy and structure in place. And then from there, the savings just grow, the higher profitability that you have in that S corporation.
Are there any differences between having a home office when it comes to deductions versus working out of like a corporate office or like
Sure.
a
Yeah, absolutely. The corporate office, you would take the full rent as a deduction. So you go rent that building and it costs $2,000 a month, and of course you're using it for business and whatnot, you're gonna take the full $2,000 deduction because it's just an office building. Now, as it relates to your house, because it's also your residential place of, your headquarters of living,
right.
you get to deduct the square footage that you use for business within your house, and you can do it in one of two ways. You can just say like, hey, I'm not trying to figure out how much my electricity bill was and my gas bill and all of this kind of stuff to find a percentage. I'll take the standard 300 square feet that the IRS is going to give me at $5 a square foot. So as long as you had 300 square feet of office space in your house that you exclusively use for business, then we would just take 300 square feet at $5 a pop. You have a $1,500 home office deduction. If you were like, no, I live in, let's say, a little bit bigger of a house that I use more of it for business, and actually my electricity bill is on the higher side and my utilities, this, that, and the other, then it might be in your best interest to take the not standard calculation for home office, but rather the itemized actual cost that you had. So if you have like a $2,000 rent, $500 electricity, this, that, and the other, you would take the square footage of your house that you use for business and get
exclusively though.
Exclusively. It can't be your dining room table that you eat dinner at and then you also put your laptop up and work there.
Or film there.
It doesn't work. It has to be an exclusive area.
Interesting.
Yes. And like how would somebody know that? Only in the event of an audit if they ask you for a picture of the room.
Yeah.
I've never seen.
Yeah.
How do you prevent that? Don't do too much. Don't take 60% of your house as, that kind of stuff. So
right.
In that second instance, that's what you're doing. If you have a 1,000 square foot apartment and you're exclusively using, let's say 200 square foot of it for business, 200 square feet out of the 1,000, we're talking about 20%, you're gonna take 20% of all the eligible expenses, your rent, your utilities, your, all the things you'll take a percentage of it.
Got you. Okay,
And you can't take the home office deduction if your business is in a loss.
okay,
So if you make 10K and you spent 15K making that 10K, you're in a loss, you can't take the expense for a home office deduction.
okay, talking about taking off things, what would you say is like the most overlooked deductions by creators?
The ones that don't have good cleaning, bookkeeping, and accounting, they overlook everything. Like any expense is bet game for them to overlook because we don't have clear financials in the first place, so they're missing stuff everywhere.
And sorry to cut you off,
No.
but do you find that like when you are going over a creator's portfolio that they're paying for stuff not out of the business that they should?
Absolutely.
I feel like that's probably something that I do too. Not anymore, of course, but like that's something that would be easy to do is like just take the red personal credit card and or debit card and just pay for whatever.
Yeah, and sometimes that might just happen even for you because an expense is so, subjective that you just kind of don't know if it's, a business expense or not, which brings us to a really great point because I'll end it here with this topic. It brings us to a good point. Section 162A of the IRS code says in order for an expense to be a legitimate business write-off, it needs to be reasonable, ordinary, and necessary. Break it down to Ron. Reasonable, ordinary, and necessary. Reasonable, ordinary, and necessary. English is my second language, but I would say they're all very subjective terms, right? Like reasonable to me, ordinary to me, necessary to me is different than what it might be, not just to you, but to your business.
Oh yeah, true.
And right? Ordinary, like I always say, a real estate agent can drive a client, a prospect client to look at a house in a $500 a month car payment or in a $2,000 a month car payment. Both of those could be reasonable, ordinary, or necessary depending on what kind of clientele that person is serving.
Right.
You're not going to take somebody to go buy a $6 million house, in one car versus another. Yeah. So reasonable, ordinary, and necessary. And the way you stay away from those things being a difference of opinion, do I agree, does the IRS agent agree or whatnot, is that you always want to make sure that you are able to substantiate why that expense was reasonable, ordinary, and necessary to the pursuit of income. Right? So travel expense is a big one. They're like, I went to Hawaii and I created a video, and because I'm a video creator, that made my entire Hawaii expense a write-off. No, absolutely not. You have to have intentionally gone to Hawaii, essentially documented that your intention was to go there and do that thing, and then, you strategize the rest of it, and then yes, it could be a write-off if you had to go to that place to do that thing also, right?
Yes.
So it's very much substantiation that comes back to whether reasonable, ordinary, and necessary is my opinion versus your opinion.
Everybody in the stream, just know you can ask her all these types of questions and more, bro.
Yes.
I don't know what your handle is, but
on what?
This is your outro.
All right, this is my outro. Thank you so much for everybody that has tuned in. It's been an absolute pleasure to host the first episode of Taxes for Creators podcast with none other than Berlin, number one, and number two at CPA-Con.
It's absolutely
at CPA-Con. Here we go.
event.
Thank you so much for everyone tuning in. I look forward to doing a sequel in the future. And speaking to the point of handles, you can find me on Instagram, The Creators Tax Strategist, or of course the podcast page, Taxes for Creators Podcast. And getting into YouTube, the YouTube is Moment Tax Services. And I would be happy and honored to have you guys join along the Taxes for Creators podcast journey on all of those platforms.
Thank you so much for having me, Jazz. You're phenomenal. You always have been, always will be. You can follow me at Berleezy on all pages, YouTube, Instagram, Twitter, wherever they got one. I appreciate you having me once again.
Thank you for being here.
Of course.
And thank you, Kendall, for having us.
Thank you, Kendall. Wherever you are, Larry. Appreciate you, bro. Thank you, everybody.
Thank you.
photo.
Oh, sorry. Oh, do you
She
have?
was definitely on the spot.
I thought she was. Do you have?
Right.
Do you
Like a
have?
statue.
Maya, do you have the phone? Get a picture with Kendall. Oh, you know what? Here you go. Here's mine.
I want to see what's up for the chat.
Oh, let's do it.
But yeah, we'll go after.
Okay. Lots of good fire emojis.
Lots of fire emojis. Let's go.
I know. Yeah.
All right. Appreciate y'all. What's up, chat? What y'all? Great job. Much love. Hey, appreciate y'all, man. Hey, Jasmine killed it again. Follow her. As y'all, level up in your creator careers and stuff. You need somebody like her, bro. She's solid. I've known her since I was like 13, bro. So trust me, she's good people. And Berlin said I'm tired and I'm out. Yo, anime DP, stop, bro. You're doing too much, bro. Just kidding. Love you, bro. Thank you all for being here for the stream. I'm sure I know she feels the same way. She's up there closing out. I don't want to get her ad wrong. It was the tax strategist, the creator's tax strategist, Y'all follow her. Appreciate y'all again. Love y'all, man. And I will see y'all this week. Right, I'll be back on stream. I know I've been kind of running away and all that, but I'll be back, bro. Love y'all, bro.
Sir, thank you so much. Yes, thank you.
Thank you.
Oh, Maya. Is it still live? How did you guys like it? Was it good? Yeah. Are we still live?
Yeah, I'm gonna end it.
Hi, guys. How's it? Thank you for tuning in. You guys are awesome. It was the first episode. I had the intro better rehearsed, but then I got on stage and the lights and the camera and I don't know, nerves got there. I think it went well. The rest of the conversation went well. We will do a sequel with other creators and hopefully with Berlin again. Thank you for tuning in, you guys. Please follow me on my Instagram, The Creators Tax Strategist, and Taxes for Creators podcast. And then come along and join on the YouTube page for Moment Tax Services as well. You know what I mean? That's where I post long form content, and that's where we're going to host the remaining episodes of Taxes for Creators podcast. So tune in, and we'll see you there. Toodles. Am I going to be able to keep all that?